In this video, I'm going to be showing you how to know the best time frame for you to pick or the best time frame for you to use to make money for yourself. Now, in case you don't know, when it comes to crypto trading or forex trading, your time frame is a crucial aspect of trading that can make or break your strategy. I'm going to explain to you what a time frame is on the chart because a lot of beginners don't understand what time frame is on the chart. They don't even know what it stands for. I'm going to talk about the different types of time frames we have. I'm going to talk about how to use them, and most importantly, I'll talk about how to choose the best one for your trading style. And then at the end of the video, I'll give you guys some tips. Also, if at the end of this video, you're able to get something valuable from this video, I'm going to be needing a favor from you. So please watch this video to the end because there are a lot of things you'll be learning from this video. Now, what is a time frame on the chart? Now, a time frame on the chart refers to the specific period represented by each candlestick on your chart. Now, the time frame could be as short as 1 minute time frame or as long as 1 month time frame. Now, understanding these time frames is essential because they show you price movement over different periods and they give you various views on the market trends. Now, that's just the theory explanation of what a time frame is. Now, let me show you on the chart. Now, as you can see on the screen, this is the BTC USDT chart right here. Now, to select your time frame, you come right here to where the arrow is pointing to. If you click on it where you have 1H, if you click on it right there, you see the different time frames you have in the market. So you can see you have seconds. For seconds, you have 1 second, 5 seconds, 10 seconds, and so on. You see them. For minutes, you have 1 minute, 2 minutes, 3 minutes, 5 minutes, and so on. For hours, you have 1 hour, 2 hours, 3 hours, and so on. So you see the other time frames you have right here. Now let's assume that I want to pick the 1 hour time frame. So I'll just click right here, see where your 1H is. I'll just click on that 1 hour time frame. Now that means that this chart is on 1 hour time frame. Now from the explanation I gave earlier on what a time frame is, I said it refers to the specific period represented by each candlestick on your chart. So for this chart right here that we're using the 1 hour time frame, that means each candlestick is representing 1 hour. That's just the meaning. So that means for this, let me make this big. So that means that for this candlestick where the arrow is pointing to this red one, let me just put the arrow on it. So you can see right here, that means that for this candlestick right here is representing 1 hour on the chart. If you pick another one, the next one right here is representing 1 hour on the chart. Each candlestick right there, they're representing 1 hour on the chart. That's just the meaning. And if you want to see the time frame for each candlestick, let me make it bolder again. So let's, for example, for this candlestick right here, let me remove these other 2 arrows. So let's talk about this one that the arrow is pointing on. Let's want to know the time range that this is representing. I'll just hold on that candlestick. Just hold on it on your phone or your iPad. For me, I'm using my iPad right here. So at the bottom of the screen, you'll see where it says Tuesday, 26 November 2024, 10 a.m. So that 10 means 10 a.m. So that means this candlestick is showing you how the market has performed between 10 a.m. to 11 a.m. That's just the minute. Remember, it is 1 hour time frame. So this candlestick right here is representing how the market performed between 10 a.m. to 11 a.m. That's just the meaning. And then the next candlestick beside it, which is this right here, let me put the arrow on it. So for this candlestick right here, if I click on it again, so you see at the bottom to show you 11:00, that's 11 a.m. That means that this candlestick is representing how the market performed between 11 a.m. to 12 p.m. I hope you understand. So that's just the meaning of time frame. Time frame is just showing you the period represented by each candlestick on the chart. That's just it. So let's say, for example, I'm picking, let's say, 5 minute time frame. Let me change it. So come here again, click it, and let's say I want to pick 5 minute time frame. I'll just click on it right there. So you can see the market has changed. The view of the market has changed. And remember, I said in my explanation earlier, I said that the time frame gives you different views on market trends. So you can see that the view of the 1 hour time frame is different from the view of the 5 minute time frame. Now for this chart that we are now using 5 minute time frame, it means that each candlestick is showing you how the market is performing every 5 minutes. That's just the meaning. So for this one where the arrow is pointing to, let me move the arrow down. Let me make it big. So you can see this candlestick right here. If you click on it, at the bottom, you see that this is 11 a.m. So that means this candlestick is showing you how the market performed between 11 a.m. to 11:05 a.m. And then from right here, the next candlestick beside it, let me put my arrow on it. So this next candlestick right here, if I click on it or hold on it, it's showing me how the market performed between 11:05 a.m. to 11:10 a.m. That's just the meaning. So that's the meaning of what a time frame is. A time frame shows you how the market is performing within that period. So let me change it back to 1 hour time frame. Just come back here to 5 minutes and then click on 1 hour time frame right there. So let me make it smaller. So I want to remove these arrows. I'll just click on the arrows and just click on delete. That's just what you have to do. Or once you click on the arrows, just come to the top right here and click on this delete icon. So once you click on delete, it will take it out. And by the way, I'm going to be making a video very soon on how to use the TradingView platform. So in case you don't know how I'm doing all of these things I'm doing on TradingView, I'm making a video on that very soon. So make sure you subscribe and click on the notification bell so you are notified when the video is out. So that's by the way. Now that you know what the time frame is, before I go on, let me also say that a time frame does not mean you should trade for that period. So there are some of you that used to ask me that, oh, if I'm using a 1 hour time frame, does that mean that I should trade for only 1 hour? That is, after 1 hour, I should exit the trade, whether I'm in profit or loss. No, that's not what the time frame is. A time frame is not telling you that, oh, if you're using a 1 hour time frame, trade for 1 hour. Or if you're trading for 5 minutes, trade for only 5 minutes. No, time frame only shows you how the market is performing for that period. That's just it. It doesn't mean that if it's 1 hour time frame, trade for 1 hour. No. So now that you understand what time frame is on the chart, the next thing is, how do you use time frames effectively? The first way to use time frames effectively is to use multiple time frame analysis. Now, what does this mean? This means that don't rely on a single time frame. Always combine different time frames to get a comprehensive view of the market trend. Now, what do I mean by this? Now, if you're a day trader, I'll still be talking about time frames to use, whether you're a day trader or scalper or swing trader. So, but let's talk about day traders now. Now, if you're a day trader, the time frames you'll probably be using will be maybe 10-minute time frame, 15-minute time frame, 30-minute time frame, or even 1 hour time frame. Now, there are some people that they do the mistake of, let's say they want to use 30-minute time frame. They just come here, so I'll select my time frame right here, and they just pick 30 minutes. So this is 30 minutes. So they just come right there, select 30 minutes, and then they put their trend line, support, resistance, do the analysis. Maybe they're using candlestick patterns, and they just go ahead and trade. They just stick to that one time frame. That might not work all the time, or it won't even work all the time. Trust me. I won't advise you to do that, and if you have been doing that, please stop, because you will learn the hard way, and I also learned the hard way. Now, instead of relying on just one time frame, what should you do? Now, the first thing is to look at a higher time frame. So, for example, if it's that you want to take your trade on, let's say, 30-minute time frame, go to where you have 4-hour time frame or even 1-day time frame. So let's start with 1-day time frame. So I'll just come to this time frame again. I'll pick 1-day time frame. So once you pick 1-day time frame, just look at how the market is performing. So let me zoom in so we can see more. Just look at how the market is performing for the 1-day time frame. So you can see from the 1-day time frame, you can see the candlesticks maybe from this point right here. Let me just move it. From this point, you can see that it has been going really up to this point right here for so many days. And then for the last few days, you see that, oh, it has started coming down again at this point. So that's what the 1-day time frame show you. So you can see now that you now know the trend on the 1-day time frame, but you are not trading using 1-day time frame. You just want to get the comprehensive view of the market trend. So after you've done this and you get the idea of what's happening, then go back to, let's say, 4-hour time frame. Let me pick 4-hour time frame right there. Now for 4-hour time frame, let me make it smaller again. Now for 4-hour time frame, you might decide to just leave whatever is happening at this side alone and just come to this point. So I'll just come right here to this point, because I'm a day trader. If I'm a day trader, I don't really need to bother myself about a lot of things happening around this side. So around this side right here, from this point to this point, I don't really need to bother myself. So let's just leave that part. So just stick to this part. You can see this is a trend. Just look at the trends. You are just monitoring trends with time frames. That's what you are doing. So you can see from this point to this point, you have uptrend and then downtrend happening again at this point. That's 4-hour time frame. Then once you've done that, you can now go to, let's say, 1-hour time frame, or even maybe just go straight to 30-minute time frame that you want to trade on. So you can see from this 1-hour time frame, 1-hour time frame is kind of still similar, but you can just come here to this point and pick your 1-hour time frame. Let me pick it from this point. So you can just pick from this point right here. So let me just make it big right there. Okay. So it is now getting bigger and bigger right here. So you can see at this point, all these trend lines, don't mind the way I'm just drawing them, just for explanation. So you can see at this point, for our 1-hour time frame, the markets kept going up. And then somewhere at this point, you can see that the market has been coming down at this point. So this is your 1 hour time frame, and then you can now go to your 30-minute time frame. So let's go to our 30-minute time frame, the time frame we want to use to take our trades. So once you have the 30-minute time frame, you can now decide to forget whatever is happening at this point, this uptrend right here. Maybe just forget about it. Let's delete it. So I just click on it and click on delete right here. Now the reason why you're deleting that is because you can see from this point right here, this point on my candlestick, you can see that it is showing us that the market is having a reversal. We're having a reversal. That's just the meaning. So that's why it is showing us what we are seeing right here. So you can see at this point, just look at this point right here. If I hold on this point, you see that at the bottom is showing me for Monday 9 a.m. which was yesterday. That was more than 24 hours ago. So more than 24 hours ago, the market has started reversing. So from there, you can now decide to put your support, your resistance, your trend lines. If you're using candlestick patterns, put all of these on your candlesticks to do your analysis, and then you can now take your trades. This is something that will really help you, and it will really help you have a higher win rate in your trades. And this is a trick that I apply when I'm dropping signals in my signal group. And if you want to join my signal group, use the first link in the description below. And also, in case you want to learn how to use your support, resistance, trend lines, price action, and all of that, I also have a video on that. I'll put the link to that video in the description below. So in summary, you can see that using multiple time frame analysis can help you see a broader or comprehensive view of the market trend and help you to make a good decision or a better decision. So if you're kind of person that's trading maybe on 30-minute time frame and you don't use other time frames, you might not see a broader view of the market. Or even if you're using, let's say, let me pick let's say 5-minute time frame. If you're picking a 5-minute time frame, you might not know that a reversal is happening. Just look at the chart right here. So for you, you might just think that, okay, maybe the market is just moving, let's say it's just moving up, then maybe it's just down, moving up, moving down, moving up, moving down. So you just think that maybe it's just moving up and down, not knowing that maybe a reversal is happening. So that's why it's good to check a broader time frame so you can get a comprehensive view of the charts. I hope you understand. Now, another way you can use this multiple time frame analysis is that always use the longer time frames to identify overall trends of the market and use the shorter time frame for immediate price action to take your trades. That's just a simple thing you just need to do. So always use the longer time frames to identify trends and use the shorter time frames for your immediate trades. I hope you understand. So that means that if you want to take your trades, and if you want to set your entry price, take profit, stop loss, and all of that, do that on the shorter time frame after you've used the longer time frame to check for the trend of the market. So this is the number one way and the only way you can use time frames effectively. I hope you understand. So now that you understand how you can use time frames effectively, the next thing is, how do you choose the best time frame for your strategy? Now, choosing the best time frame or knowing the best time frame to pick depends on different things. The first thing is your trading style. Now, there are different time frames you can use depending on the strategy or the trading style you use. So for example, if you're a scalper, you should be using between 1 minute time frame to 5-minute time frame and maybe sometimes 10-minute time frame. But I don't think scalpers use 10-minute time frame, but you can still use 10-minute time frame for scalping. Now, in case you don't know what scalping is or what scalpers do, scalpers are people who trade and take profit within minutes or seconds. So a scalper is someone that will enter a trade now and will just get out of the trade with like maybe 5% or 2% profit in like maybe 10 minutes, 5 minutes, in 2 minutes. Those are scalpers. Scalpers are people that take their profit in a very short period of time. They just enter a trade and get out in 30 seconds, 60 seconds, 2 minutes. Those are people that are called scalpers. So if you're a scalper, you should be using time frame like 1 minute time frame, 5-minute time frame, or maybe sometimes 10-minute time frame. So let me just show you. Just click on where you have time frame right here. So you can see you even have seconds. You have 1 second, 5 seconds, 10 seconds time frame. But I don't think you can use seconds to make any kind of concrete decision. So I won't even advise it. But you can see for the minute, you can use 1 minute time frame. If you're a scalper, you can use 1 minute, 2 minutes, 3 minutes, 5 minutes. You can use 10 minutes as a scalper sometimes. So these are the time frames you can use if you're a scalper. Now, if you're a day trader, in case you don't know, a day trader is someone who takes a trade today and takes profit before the end of that day. So if you're a day trader, you are someone that maybe you enter a trade, let's say 9 a.m. and before the end of that day, you must get out of that trade. That's just what a day trader is. So for a day trader, you can now decide to use maybe from 15-minute time frame, 30-minute time frame, 45-minute time frame, and 1 hour time frame to 4 hour time frame. Most day traders don't use 4 hour time frame. The 4 hour time frame is just for you to check the comprehensive view of the market. But to take your trades, day traders usually use 15-minute, 30-minute, or 1 hour time frame. For me, I always use 15-minute time frame or 30-minute time frames most of the time to drop my signals. And then the third one is swing trading. So if you're a swing trader is someone that can enter a trade and stay in that trade for as long as 2 days, 5 days, 1 week, 2 weeks, and so on. So a swing trader can stay in a trade for as long as he or she wants. I hope you understand. And for that, that's when you can now be using from maybe 4-hour time frame. Then you can go to the days. You can use 1 day time frame, 1 week time frame, 1 month time frame, 3-month time frame, and so on. So that's the first factor that will determine the type of time frame you use. So again, if you're a scalper, you use between 1 minute time frame to 10-minute time frame. If you're a day trader, you use between 15-minute time frame to 4-hour time frame. And if you're a swing trader, you can use even from 4-hour time frame to as high as 1 month time frame, 3-month time frame, and so on. That's the first one. The second factor that will determine the type of time frame to use is the market volatility. Now, volatility is when the markets are really going up and really going down. That's what we've been experiencing recently in the crypto space. So in highly volatile market, that is when the markets are really going high or really going low, shorter time frames might be more informative. So this might be beneficial to a lot of day traders because I'm a day trader and that's what I've been doing in this volatile market recently. So if you are using shorter time frames, it is very, very informative and you can make a more concrete decision in a highly volatile market. So if you see that the markets are really going up and down, that is, there is high volatility in the market, then you should stick to shorter time frames like 30 minutes, 15 minutes, 10 minutes, and so on. Now, the third factor that will determine your time frame will be your schedule. Now, you need to choose time frames that align with how often you can monitor the market. So like I said, if you're the kind of person that you can monitor the market 247, or don't let me say 247, like you can monitor the market most times during the day, then that means you're a day trader. So that means you can be using time frames that a day trader is using, like 15 minutes, 30 minutes, 1 hour. But if you're the kind of person that you don't really have time to monitor the market 247, so that means you will likely be a swing trader, then you can be picking 4-hour, 1 day, 1 week time frame. I hope you understand. And then the third factor that will determine the best time frame for your strategy is to test different strategies with your time frame. So like I always say in my videos, how you can find the best strategy is to test different strategies. Now, while you are testing these different strategies, always test them with your time frame. So if you're a day trader, test these different strategies with your time frame. It will really, really help you. Don't test one strategy with 30-minute time frame and test another strategy with like 1 day time frame. Make sure you are sticking to a time frame that you want to be using and then test them with different strategies. I hope you understand, because some strategies work better on specific time frames. So you need to test and adapt accordingly. So if you're the kind of person that you're a day trader, that means you'll be using like 15 minutes to 1 hour time frame. That means that on your strategies or the different strategies you are testing, make sure that you are testing 1 hour time frame on them, 30-minute time frame, and 15-minute time frame on them. These are different factors that can help you to know the best time frame for your strategy. Now, before I go to the next part of this video, let me also say that you can see that all these factors I've listed shows you that all of the time frames are good. There's no best time frame on the chart, whether crypto or forex. There is never one best time frame to use for your trades. Trust me. If anybody is telling you that this is the best time frame for you, no, don't stick to that. The best time frame depends on your strategy. Like I said, I just listed the different time frames for a scalper, for a day trader, and for a swing trader. So always pick the time frame that relates to your strategy. Please don't say because someone is using a particular time frame, you also want to be using it. There is no best time frame, because a lot of people always message me and ask, please, what is the best time frame for trading forex or for trading crypto? There is no best time frame, and I hope this video answers that. Now, before I go, let me give you guys some tips to help you with time frames. Number one is always use the daily time frame. In whatever strategy you are using, always use the daily time frame. I've come to realize that this is actually good for both swing traders and day traders. Trust me, you don't actually need to trade on that time frame, but always open that time frame to see how the trend is moving. 1 day time frame before you zoom into maybe 15 minutes, 30 minutes if you're a day trader. And then number two, I've talked about this, always combine 3 or 4 time frames, just like I did, where I started from 1 day time frame to 4-hour time frame to 1 hour time frame, then to 30-minute time frame. So always combine different time frames. You can use one to check for your trend, and then use the other to check for the trade you want to enter. Number 3 is don't use too many time frames. What I mean by this is, don't say today you want to use 30-minute time frame to trade, and then tomorrow you go ahead and use 2-hour time frame to trade, and then maybe the next one you go ahead and use 10 seconds time frame to trade, and then you keep changing time frames every day. That won't be good for you at all. Always stick to a particular time frame. Maybe if you are using 15 minutes to 1 hour, stick to that regularly, and you'll see that you will keep getting better. To be honest, that's one of the best tricks that has helped me so far. It has really, really helped me. stick to a particular time frame for your strategy. Don't be jumping from one time frame to another. If you're a day trader, stick to 15 minutes to 1 hour time frame or even 4-hour time frame. I hope you understand. And then number 4, always backtest your strategy. Before you pick a time frame, always backtest it with demo trading. A lot of apps now have demo trading. Like Bybit, they have demo trading already if you are a crypto trader. And then if you are doing Forex, you can use Octa Trading app. They have demo trading also. You can backtest your strategies with these time frames on these platforms. So now that you know all of these things I've explained in this video, you should now know that there is no best time frame. All time frames are good and it all depends on your strategy. So start experimenting with different time frames and you will soon discover the perfect combination to help you make profit back to back. And before I go, just look at the chart. What I was just saying earlier, this is 5-minute time frame. I was saying that if you are someone who is in a 5-minute time frame and you just want to go ahead and use 5-minute time frame without using a higher time frame to check the trend of the market, you can decide and say, okay, maybe from this point, you can see it right here. You can say from this point, maybe the market is just going up, and then you think that, oh, it will go up. Let me put my line right there. From this point, this was where I put the point. So you can see from here, someone will think, oh, maybe the thing will come up and maybe come and touch this point right here, because you're seeing that, okay, the market is going up without even doing any concrete analysis. So you can see right here why you need to be checking higher time frame. So you can see that instead of it going up, the market has actually come down back from that point. You can see it has come down to this point back. Instead of going up, it's trying to come down. There's a reversal happening. So you can see why you need to be using your higher time frames. Thank you so much for watching. Thank you so much for supporting. I will see you guys in the next video.